Welcome, everyone. I am back. Thank you for all the kind messages, Twitter, and things you've saying. So, oh man, I have to tell you, just before we get started tonight, I have not looked at the markets until today, and actually not until about midday. So I've studied a little bit, so don't criticize me too much if I'm a little rusty. I have been completely blacked out from the world we all live in, and I'm glad to be back. I'm as glad to be back as many of you have me back, so I really appreciate that. So you folks did a good job while I was gone. You got this market over 4,500, seems to be running pretty good. Everything that's happening out there seems to be positive. I still would tell you I'll reserve a little bit until I get into Sunday, just making any strong comments here. But I will go through the charts with you and do some things like that. So, also before we get going tonight, I just want you to know that the indicators are out. I'm sure many of you seen that. We can tell by what's going on internally here. Appreciate it a lot. Tomorrow, at 1 o'clock Eastern time, I'm going to do a live stream intraday while the market's live, and I'm going to pick some of the indicators. There's 10 new indicators. I'm going to go through some of these real time and actually show you how they work. I'm not sure how long I'm going to be able to go tomorrow, but I suspect somewhere around 2 hours. Probably won't make it to the close. Depends on how things are flowing. We'll see what happens. But mark your calendar. 1 o'clock tomorrow, live stream intraday with the markets, new indicators, talking about how to use some of these. Those of you that haven't seen them, you can go to the same link that we were at before. It's Kendall Report /indicators. What should happen if you bought the previous indicators, when you fill out the form, it should update the pricing. There's a special pricing there for those of you that bought earlier, and there's also a discount for the next 60 days. If you didn't buy them, it's a pretty deep discount off of that as well. So the price that is on that sheet without the discount is actually a discount. I know that sounds funny, right? But it actually is, because of the price will be substantially higher, and we'll talk about that. But the bottom line is I'm excited. There's been so much work behind that. If you knew what went on in the last several weeks, just trying to get them out, I know everybody's been clamoring, so I'm glad they're out there. Hopefully you're having a good time. We saw some really nice comments on Twitter. Please make comments here on the channel so we can get some feedback there. It'd be awesome to have that. So let's go ahead and let's get back into talking. I just want to get all the announcements out of the way. Like I said, I'm probably going to be a little rusty, but I'll be able to, once I get into the flow, we get to the charts and things like that happen. It's kind of interesting. For this morning's opening, we had a big day, right? For this morning's opening, I'll tell you about the database, but there were a ton of buy signals, and I'll show you. I'm going to go through the database, and remember, because I do this broadcast now at 6 p.m., the database is actually going to be starting to run in about an hour. So it will be running, and the results will come out. So those of you who have Wavetech, or if you have PortfolioXpert, you're going to know exactly what those numbers are when they come out. Yesterday's numbers pretty big. I'll go through those here in just a minute. So let's talk about this, what's going on, right? Those of you, I appreciate, I saw somebody say something. If I hadn't been watching Bob, I'd been thinking we had a bear market rally. This is getting bigger and bigger, and this is in spite of everything that has been thrown at this market to be negative. And now we've got PPI, CPI, we got the inflation numbers. I'm looking at this 0.1, core 2.4 on PPI. That's something, folks. And what have I been telling you on this channel? There's not going to be a recession. And that's exactly what is playing out here. And soft landing, whatever you want to call it, where this thing is not rolling over and collapsing. Are we done with the interest rate hikes? Possibly, but I think there's at least in the meeting later this month, we'll probably see another quarter point. Maybe there's more. I've argued before that around 5.5 was my original terminal rate. I'll go through that when we go through the interest rates, going back several months ago, maybe even 5 months ago. So we're getting close to that. And what's interesting, though, is the Fed's not going to have to lower rates. I've talked about all the normalization, all those things that I've been talking about are starting to come into play here. So I'm looking like I had the crystal ball. I actually have a crystal ball on my shelf right over there. I won't bring it into the picture. But the results of what we've been seeing is the normalization of the economy, and everybody wanted you to believe that these interest rates were going to destroy the economy. There's still people out there arguing that there's a lag and all this stuff's going to happen. I don't believe it's going to happen. I think there's some things that you need to pay attention to that are still evolving. I won't get in. I'm just getting into flow here, but what we're really looking at is, I think, new industries, industry that's exploding. We all know is, generative AI is huge. I can tell you 3 of the indicators and the things that I put out just recently, I did personally through generative AI. I didn't have any help on some of these. And so that's huge. And I told you before, I'm now officially dangerous because I can start getting these ideas out. I have some really interesting things that we want to look into and ultimately get into possibly adding some of these things into our portfolio platform. This is a very exciting time, I believe. And I think what you're seeing with the bids in the market, I remember before I left, and I was just looking at PPMs, we'll go through them in a minute. They're just the momentum is flattening out, but the market's going vertical. We're trading above RXT weekly right now, I believe, on the NASDAQ and the S&P. So like I said, I've literally in this last couple hours in the afternoon, I've been able to try to get caught up and make sure that we're getting, that I have some perspective here. So by Sunday, I'll be 100%. And really looking forward to next week just being back here. This has been, I would just tell you, it's been an absolute brutal week, to say the least. So it's great to be back home and sleeping in my own bed and all that. All those things are wonderful. We all know it that's been on any trip. So that's been good. Let's talk. There's a couple of things that I had to mention here that kind of tie into what I'm talking about here. Is the claims came in down 12,237. Employment just continues to rock. And then we got continued claims up 11,000 to 1.72 million. That number's just been solid right in this 1.7 range, really just a little bit up, a little bit down, not a lot there to actually go into. And I forgot actually to look at what's coming out tomorrow. So I'll put it up on another screen while I'm setting up stuff, and I'll probably put that in on some of the dialogue that I have to talk about. But it just was kind of good to be here. Sorry I was a few minutes late starting. It's just it's pretty funny. All you do is turn this equipment off, walk out. Something about starting it back. There's always glitches, and I had a couple to deal with this afternoon. So let's just talk just a little bit more on this recessionary situation and what I think is driving things. And I've talked to a number of people about this, but I still believe that while some folks are telling you that productivity is collapsing, I think the opposite is happening. I think the measurements that we're seeing in productivity those might be lagging, but I believe that this generative AI, whether it's chat or some of these others out there, I saw that now Elon Musk couldn't stand it anymore. And remember, he's got X, I think, .ai coming out. So it's a lot of these, there's going to be a lot of competitors and things out there that we're going to deal with. And I think it's just going to get more and more powerful. I call it a brain enhancer. So if you have a little bit of intelligence, it can make it this big. If you have a lot of intelligence and you know how to prompt this stuff, you can really look smart, and you can really do things that you haven't done before. And I'm super excited just about some of the skills that I have acquired by being around this stuff. And I would have done anything to have this. I've been trying to explain to coders for years what I'm trying to do. And I've always wondered if even some of the stuff that's been around me for a long time, if it's actually doing what I think it's supposed to be doing. There was a lot of challenges going back. 1992 was the first model that I put together that was programmed into software. It was 91, 92. And, and the logic and the things you could do there was somewhat limited. So as you would expect, over the last 30 years, we've seen a lot of new things come into play. And now with this stuff, it's pretty big. So I think the single biggest thing that changes everything is productivity. So if indeed my theory is right, that behind the scenes right now, maybe not even measurable, that productivity is just skyrocketing, then the multiplier of GDP, the multiplier of the output of everything around us is going to go through the roof over the next several years. And it doesn't have anything to do with who's president, what the policies are, none of that. We're going to just see this thing really explode. And I don't know where it ends. I know where it started. We've been on top of this thing internally here, myself and one of my associates that we work closely together. We've been on this stuff hard from last December. I mean, we really jumped on this thing when things really started to rotate out, when Chat 3.5 came out and all that stuff. So it's been exciting, but I think this is driving a lot of things that are going on. And I also would say that some of the other industries that are trying to change, I actually am not a big fan of electric cars, but there is a lot of movement there. There's mining activity, all of that stuff. I think one day I'm going to do kind of a show on mining companies, some of the ores and some of the things out there, is that is certainly possibly going to be in play. I live in Arizona, and I can tell you there is a lot going on in this state as growth. It's got to be up in the top of states that are growing, just what's happening here. They're building infrastructure all over the place. We've got the new chip plant, Taiwan chip plant down in the valley, and there's a bunch of other stuff. And mining is exploding because I believe probably you could argue that copper is the center of Arizona is the center of the copper world. There's a lot of stuff here, and actually where I'm at in the mountains is copper country, and there's just a lot of stuff. So ores, all kinds of stuff is happening. So it's going to get real exciting. I think all over the country, there's going to be some hot spots, but this whole thing is just exploding. I think there's literally, I hate to use this kind of a corny word, but like a new era that's starting to emerge, and it's emerging very quickly. We always have joked right over the years that things happen much faster than they used to. Well, what we thought was fast before was slow, and what we're about to see is going to be really substantial. So I think that I'll get out of this loop in a minute. We'll go ahead and get into the rest of the podcast. But there's some things I've been thinking about on the trip, and I really think there's one of the analysis that I hope to be doing is just kind of digging into other areas and industries that are starting to really emerge. And I think probably over the next 2 years, we're going to see things that we didn't even know exist, and they're going to be explosive. So I think there's going to be a lot of stuff. We all know the hype around AI, but it's not necessarily hype. A lot of it is very real. I remember back in the .com days, it was really one of those situations where everybody was hyping it up. Of course, you got pet.com, which had to sell 10 pounds of food to every dog in the country to actually break even. And of course, they went out of business. But this is not a .com situation. This is something that actually, through the technology, is capable of creating. So enough on AI. I'm not really trying to hype it. It's just my belief system. And just knowing what has come into my life and into our company and things that we're looking at right now and what's likely to happen going forward. So it's super exciting. All right, so let's do this. I haven't been around for really all this week, right? So I noticed when I set up my page every day, the last report I did was on the 7th, literally last Thursday, and that was it. So I was going to do something Sunday. That didn't happen. There was no chance. So that's the way that goes. But let's get into going through the database. We'll go through the charts, and then we'll call it quits. And just make sure, like I said, if you're really enjoying, I think some of these new indicators are pretty amazing. And that's why tomorrow, remember, 1 o'clock Eastern time, I'm going to come live at least 2 hours. And I'm going to pick some of them because there's too many to go through everything. And I'll probably do at least one more of those next week, or maybe two. There could even be a Saturday situation where we all can focus, where we come through and go through some of these indications. So let's go ahead and get into the database, see what's going on. So as we look at the database here, the daily, this was as of yesterday, was at 63.43, but look at the number of trades. We had 1,980 buy signals for this morning on a pretty robust day, to say the least. I think there were two sectors that were actually negative. I know energy was one of them, but we're looking at only 112 sell signals and almost 2,000 buys, rounding off. And you can see the sentiment on this run was very bullish. And so what I want to talk about just for a minute here is that let me see if this camera works. It does. What I want to talk about just for a minute here is when we come into the weeklies, that run will happen tonight, or not tonight, tomorrow night after the close. And my expectation, we're around that 63-64% long. What my expectations is for the weekly models to get more traction and start to move up 68 plus. There could be a pretty big run because things are starting to break out. And if we get that, I've been talking for maybe, I don't know, folks, maybe 4 months, that what's happening here is that forward-looking part of the database that I've been saying there's 100 days. Well, there's still 100 days, okay? So when we look at this thing on a full screen basis, you can see that right now on a weekly optimized model, we are current duration about 55% of the duration has been yielded now, typically 204, and right now average days, right now, the duration fulfilled, average current duration is about 54. So we got a ways to go yet. Actually, and I quoted that wrong. The duration percent fulfilled is 27%, not 54. That's that is right. Okay, I'm sorry. I'm looking at these lines. So that was, 26% filled. So 26% filled, and that was the average current duration is 54 days, and the average holding in this group is 204. So what that tells us is there is still, crazy as it may seem, a lot of forward-looking positive prices. And I saw somebody mentioning, I think he said, I'm not going to sell on the NASDAQ until there's all-time new high. That's getting more and more probable, and I talked about that a couple of weeks ago. I remember saying we're a lot closer to making a new high than making a new low. So all of these bears, all these people that have been telling everybody this stuff, it almost feels like a conspiracy of some sort. Like, how could that many people be wrong? But like I said, you guys are hanging around me. It's a pretty unique situation here because of this database I'm showing you right now. Not too many people are watching 15,585 symbols at the same time, doing the same analysis on every symbol and being able to give you these stats. So I told you, this has been my power. This has been my differentiator for decades, and it continues to be that case. So, but let me just go over to the, since we got a full screen up here, let's go over to the weekly just for a second here. You can see we're 66. So easily, I think we get over 68 on the intermediate, probably into 70 handle, 72. And I'm going to see if I can find something very quickly here that might be of interest. Let me just see if I can. I won't spend much time looking for this, but I think if I get there, you folks have seen this. It's kind of on the splash screen when things come in. But what I'm talking about, that probability chart, I'm moving forward, and I'll just talk about it. I'm not bringing it up. It's not, the file's not being discovered very quickly. But what happens with all of this stuff is that once this thing starts to rotate, we could see an extension, folks. We could see this thing roll into 24. And I've said this before, I'm not big on these kind of stats, but it is true. I know through election years, I don't think there's ever been a negative market, or there hasn't been very many. We'll say, maybe not never, that's a bad word. But it's definitely one of these things where it's unlikely, the probabilities are unlikely. And I think, and I'll talk about this more, but I still think the Fed gets an A+ on everything that's happened here, especially these prints that we got out of PPI, CPI, all these prints that are coming out right now. And of course, the argument is going to be no more interest rate hikes, but I still think there's one. So let's go on. Let's get into the S&P. Okay, folks, here we are, the hourly chart. I got the market grid on there. Now you folks have them, most of you, which is you have the predictive SMAs. The names are WTAR forecast, so you see how the averages are being forecast. You can still see, or even on the hourly, a slight bias, but it looks like it's going to try to turn. I'm just looking at a number. Later this evening, we could see it move back into the 21-hour moving average. Been really a robust week, as I mentioned. I'll show you in a minute, is that the weekly chart is now above the RTX weekly has been penetrated at the moment. So I'll talk about those numbers and what the critical numbers are here in a minute. But I'm telling you, this is a crazy market. It won't go down. I remember the algos suggesting we're going to go down. All we did was flatten out. We lost momentum. It continued to climb, stayed above the 21 period moving average, kind of waffled around the 10, but the slope of the 10 has been dominant through this whole pattern. And look here, I mean, this is the hourly, right? But look how tight all the hourly ranges are. We had some volatility when there's some news, but for the most part, these things have been really tight, moving in that range. So, like I said, probably coming in, I'm just looking here, coming in like always. London is a very interesting turning point, so it does look like maybe a turning point. Whatever downside we get probably stays over the 21 period moving average right now, which is 45.26. That's a weird number to put out there. 45.26. We're trading right now 45.41, right? So pretty crazy. I'll try to bring up some of these old targets that we had and try to be as efficient as I can to get through tonight's video. So let's take a look at. Let's go over to the daily. And this is what's been really pretty bizarre. And I'm gonna draw in a couple of things here just to focus in. Yeah, so this indicator here, we were getting downward. It was saying that the momentum was going to drop, but it stayed positive. So this 10-period moving average was pretty significant. Let me use different colors here. So let's just say this thing here, that angle was good. We flattened out, and we really have a little angle, but it's going to flatten out again. But during this time, we basically got a zigzag to come out of here, an ABC, and now we're off to the races again. We're going to go to the weekly chart here in just a minute, but the momentum still is being forecast over here. You can see to flatten out. And I'll show you some values here in a minute, but everything's suggesting we're likely to get into this over here, probably some kind of consolidation range or something like that. But this is how it looked. But as we were coming into this week, it was looking like we'd get some downside. We have the opposite. We watched the market just go vertical here on the whole week, right? So we'll see how this thing rolls. It started last week, but it'll be interesting to see how things flow here tomorrow. The algos are suggesting that we probably have a little bit of flatness, maybe give back things, and we'll go to the weekly chart here now just to get an idea where those RTX numbers are, and I'll go through the market grid numbers here in just a second. So market grid on daily, a little small over on the far side of this page, but we're looking at the 4532 is S1, 4554 S2. We're trading 4238 right now, pretty narrow range so far tonight, but I would go with probably an S1, possibility of an R2, but the indicators are suggesting, and the algos are suggesting, that we backfill a little bit. So maybe R1, S2 could be the number to watch for, and that would be R1 is 54, S2 would be 4520. So look for that type of movement here. I'm going to bring up one of the new indicators here just real quick. And so just know, and I'll go through some of this tomorrow on the live stream, but right now there's basically a 60% chance that we can penetrate through, only 40% chance we're going to hold 30 over here. So that's why all this is flattening out, and those probabilities are going to continue to probably backfill here just a bit over the next several days. But regardless, the absolute worst case is we're probably going to remain above 4,500. Let me put on some fib targets up here just so we can get to get a look at that. So there's some targets up here right now. This is daily, and these have been running since last week. They're right now at 4540, which one of those, there's some targets embedded in here. I'm going to blow it up so you can see there's some new targets that just came out. 4540, 4590, 4620. But if we go to the previous targets, we're looking at 4748, 4893, ATH, all-time new high to hit that, and then 4982. And those numbers are up here. There's been a new update here, so it moderates. You'll see this a lot. And I think with the way that the indicators is suggesting that we probably get this sideways chop in here. But that was expectation last week, and it didn't happen. Okay, so I would think as long as you're staying above these averages and you're holding them, you should probably tighten some stops up if you've been long this thing, and it should remain, I think, pretty positive as we go sideways here. Let's go over to the weekly, and here's that weekly. Look at the percent to hold on the 10-week moving average, 90%. So, and that value is a bit below where we are right now, but we're looking right now at that value right around 43.49, I think is the number here. So that's a long ways from where we're trading right now. So just know that but also look, the algos here are starting to soften a little bit or projecting. I'd still think what we do, if we get the RTX sell, let's get that number out there. That is 45.28. Last trade 45.41. So if we close where we are right now, tomorrow's close, what we're going to see is an RTX sell signal, which simply means that there will be possible 1 to 2 weeks sideways. The algos are suggesting that on dailies and weekly. And we'll see how this thing plays out tomorrow. I personally look forward to my analysis that we do on Sunday night, Sunday afternoon, late afternoon. So let's go ahead and let's move on, and let's go to NASDAQ. I'm staying weekly here. Same kind of probabilities. I mean, pretty insane. 10, 21, and 40, all 90% probability to hold those values. I know most of these values aren't anywhere in play, but what really was just telling you the angle of attack is huge, and it's not likely to burn off. So we're looking at a weekly chart here on NASDAQ. And so, but look at the number there, 15,582. We're trading 15,708 right now. So close over 15,582 will give us RTXL. Possibility going sideways, and I would suspect we go sideways into this 10-period moving average. If we look at the actual dollar change of this thing, we're looking at about 240 points per week on this moving average. So it's fairly big. So let's go over to daily. So we get pretty high percentages here on the NASDAQ to hold. It's interesting the way this thing, we got that big reversal going back at the end of June. We got that window dressing quarterly end situation that happened, and now we're just playing this thing out. And it's hard to believe we're basically halfway through July already. So as we go forward here, what we're going to see is we are basically 10 days or so away from the Fed meeting. So those next 10 days are probably ultimately, I'm thinking we end up with a sideways action. But if you look at the algos here, little dip and another rally probabilities, but the moving average, this is daily, right? So there's still some really substantial percentages and angle of attack that can happen, should continue to go on from this level. So let's go on and let's take a look at the Russell. All right, so the Russell has also had a nice move to the upside. Let me scale this back. There's a new fib target that came out a few days ago, which was, let me get them up here. It was 1929, 1965, 1987. We printed on the highs here. We printed up to right now, let me get this exact number, looking at 1965. And then, 1967. Those are the numbers that we're hitting. If you recall, these fib targets up on top here were a bit higher. They were 2015. So all that's been moderated, but this is pretty typical in here. And once again, it just looks to me, and it has looked like this for a while, we're just climbing this wall of worry. We're working a really broad range and we're trading up at the upper extremes. But what's likely to happen, so when you're looking at these index, folks, the indexes are indexes. But when you start to get into some of the breakdown inside of these indexes, I think there's some pretty substantial rotation that's going on here. I'm looking at something on the other screen real quick, so bear with me while I take just a quick look at that. Yeah, so one of the things, like I said, I've been really out of touch, but both the CRE, the banks have continued to do well. I was the one, I guess, that said no banking crisis. There was a few banks with problems. All of a sudden, all of this stuff is in a rearview mirror all of a sudden. And listen, folks, this is, like I said, if you just listen to what I said earlier, if you just join, go back and watch the replay, there is just a lot of things going on, regardless of who's president, regardless of what you think, regardless of what interest rates are, that is just going to continue to happen. It doesn't seem to be anything to derail it. And I think maybe we'll get some signs from the markets, like somebody that's been really screaming bear finally capitulates and wants to get long, then we can get out. But for right now, they're probably, there's building a bigger and bigger argument, especially NASDAQ, S&P, that we could end up challenging these upper end of these ranges. So we'll stay away from them at the moment. I'm going to just do my normal analysis every week. But as we get closer to the end of the month and we start to look at these quarterly charts again and the monthly, I remember looking at it last month, and things don't look necessarily frothy. They don't look like, they also don't look like they're about to end. So there could be some decent consolidation, and I'll cover that as we get closer in from that standpoint. Yeah, this is a interesting chart. We got this is daily, looking at the 10-year, and yeah, I mean, this is a pretty good move. And if you recall, before I left, and one of the things I've been talking about here is a range-bound type thing, where it's around where we are now. Lowest end is probably around 365. Look how there's very low percentages that it's going to stay above these averages. Even the 200-day is at a 17% probability. And I'll talk to you about tomorrow when we're live. I've had a fair amount of experience in dealing already with some of these probability charts, and there's a magic number I will share with you, which is that around on the 200, around a 16% number, but I'll show you tomorrow. But the bottom line is, this thing just rolled over. We've seen these kind of rollovers before, and it does look like we should start to see some stability, but the 200 is definitely in play. I'm just going to throw on something here real quick. I'm going to throw on the PPM 200 real quick. So the 200 is showing that it wants to stabilize. It's still positive, but basically flat more than anything. It's 0.0089. So that's about as close to flat as you're going to get. It's a positive number, but it's not upsloping a lot. And it looks like all of these algos want to flatten out again. So maybe you'll get retracement back in here. This is daily, so since I've been gone, let's just touch the weekly for a second here. So weekly, if you recall going back all the way to May 1st, the targets on the upside were 401, 429, 447. We printed last week. We were able to print 409. That's right in that range, just above that fib target 1. And then this week we printed also a 409 print, and it just reversed big time on some of these inflation numbers. And I'm sure this is all to do with expectations of the next Fed meeting. There's going to be a lot for us to start to focus in on as we go through the next week or so as we get closer to that Fed meeting. So yeah, this market I think is probably extreme down. It might print, but I think we get a consolidation. By the way, if you're paying attention last week, we actually got an RTXL signal. So there's probably one more week sideways, but I still think these markets are spiking, consolidation, spiking on both ends, up and down, and they're just like waffling in this range. If you look back, we were going back here, we were 409 back here on February 27th. So this was a retest of these highs. And if you start to break it down, I'll just do it for a minute. You start to look at the monthly, you see we've really been in a trading range going all the way back to October of 22. So October 22, we got a 433 print. So we're still in that range. You can see the monthly, we've been running along that 10-month. And the 21 is right now at the 306 level. I don't see us getting down that low. The market grid number on the monthly is probably going to be about the extreme there. So let's go ahead and take a look at the 2-year. And this is monthly. It's still got a high probability. Look at this, 90% to hold this 10-month moving average. But let's come a little closer to earth here and take a look at what we got going here. The 10-year is reversed as well. We do have some upward slopes. It looks like stability coming in. Best ideas here is we're probably going to stay sandwiched between the 40 and the 10-period moving average. All right, next we'll cover crude. I'm telling you, I have not seen this. And I glanced at it right before I went live, but here we are all the way back to the 200. I remember talking about getting back to the 200. This is daily, and looks like we're probably going to hit, that's probably around the extreme, and that's all the way back up at $77. I remember some of these numbers that I was talking about. Let's go over to the weekly. Weekly's printing up at the extreme for the week. We're looking at 79.39, 77.32 is R3, and 77.33 is the high so far. This is weekly, and we still have, let me blow this up a little bit so you can see it. We still have a pretty high probability that we're probably going to stay underneath this 40-period moving average. You see it's at 67%. Pretty good chance we'll back up into this range. The 10-period moving average is expanding. This is weekly again. Just continue to see this thing really come into these ranges and start to stall right in here. So I would believe that the energy markets are just going to stay stable. I mean, let's go to monthly for a minute. You can see something here. As all we've been doing, we've declined, but we're just trading sideways here. There's no trend on an intermediate trend, not up or down. There's a slight bias to the upside yet. So the numbers we could see up as high as the possibility of $85. And that's not a real high probability, but it is a probability at the moment from a technical standpoint on the monthly. All right, let's start with the gold, and I'm just going to stay monthly here since we haven't looked at this. It's been a week since we looked at that. This is pretty much what I've been talking about, folks. We came down to, this is 10-month average. 10-month average was to be the solid support. That number is right now at 1887. The low is, what was the low? 1908. So we came down to that. And now if we flip to a weekly, trying to break out. If you recall, I thought we could print an 18 handle, just couldn't get it. Good sign. PPM starting to turn up on a weekly. There's some Fibonacci targets I'm going to throw out here. I'm going to sound like Peter Schiff for just a minute. Looks kind of bullish. The targets up on the upside here. Are you ready? 2167, 2304, 2388. This is a weekly target. PPM is going to start to increase. I thought we'd get down to this 40. We just didn't. We fell short of it, and it just really turned around pretty hard. A nice right-hand turn. Let me just bring daily up so we can look at that. See, daily's probably getting ready to set like a right shoulder. We rallied up into these fib targets, and now we should set back into these moving average setup. Some kind of a 1, 2, 3. I'm going to draw that in because this is probably the play in gold here. Bear with me 1 second. So the 1, 2, 3 would be like 1. We set back in here, and then there's a potential here. And it's possible some of these fib targets out here on the daily lying out there in that larger pattern are still have some validity from that standpoint. But we should see actually all of these patterns start to emerge out of here over the next several weeks. So gold may have bottomed. That may have been it. Like I said, my expectation was like an 1850, 1870, and just couldn't get the print to come in. All right, daily Bitcoin, this final market. Yeah, Vito, that's awesome. That's why you guys have these indicators. You can take this analysis that you learn from me every night and apply it to these indicators on your market, your stock. I think it's incredibly powerful. So let's go ahead and take a look here. Bitcoin had pretty good day. Still kind of some correlation with the market. I remember talking, folks, that we're probably going to go sideways into these moving averages. Here's the 21 driving things. Looks like the algos are starting to show some increased move. And I thought it was interesting. I did take a look at this weekly chart a little bit earlier. And when we look at this, new fib targets as of this week. And fairly exciting if you're into Bitcoin. 222 to be exact. 46,602 and 43,308. So those are pretty good patterns. If you remember, before I left, I was talking about how these algos, everything looks like they're turning up. You can see, let me turn off the trend percentage here real quick. So we can just see these averages, but look at that angle of attack on this thing. Pretty insane. We got that RXT sell signal a couple of weeks ago, sideways for two weeks. Now we're starting to see it start to move up. My expectation would be it would come in on Sunday. We probably have an upward sloping grid, and that the market starts to move up into that grid following that 10-week line there. So, man, I'm so excited that you folks have these things now. It's you now have these predictive moving averages. A bunch of you do have it. So if you haven't got there, go ahead and get that thing. So let's come back on screen here. Yeah, come back on screen just to talk to you for final couple minutes. And it feels good to be back. I had better flow than I thought I would have. I would just tell you this, folks. Come to the live stream tomorrow. I'm not sure which indicators I'm going to cover. I have a pretty good idea. I'm going to go through some of the signals, and definitely want to go through some of these probabilities and things like that. We'll see what happens. I would like to spend some time potentially trading real time in the markets here, and I think that would be fun to do and explain what's going on with the indicators and things like that. So make sure you do that. I would just suggest, if you're serious about being around the channel and going forward, I would love to have you be able to follow through on your screen. So I suspect, I'm going to guess 80% of you have at least 2 monitors. Now, not everybody has 8 monitors, but a lot of folks have at least 2. And so just now, I think it's really exciting. A deep discount, you don't want to miss it. When you see the new price, you're going to be disappointed. But there is, just so you know, just talking about the new offering, there is some really cool, exciting things that are going to be worked on more in the signals area from the standpoint of signals. And I'm trying to create some things that will combine and put rules together with the PPMs and stuff, basically like the models, those of you that have Wavetech, maybe putting some things. I've got some ideas on how to enhance with the newer environment. You have to remember, and they work fine, but you have to remember that Wavetech models were built in 1992, and they've worked. They've definitely been tested over time and tested in the trenches, however you want to put it, and they've really proven themselves and still continue to do so. Just some of the shorter term ideas and some of the flow, we have, I would say, a heightened probability of volatility that's going to affect a lot of things, and possibly you need to use multiple strategies. And like I said, my happiness about everything that's going on in the world with generative AI, all this stuff is, to me, like just amazing. I used to complain how screwed up the world was, that I thought, well, it's for you young people to carry it on. It's probably good I'm old. And now I want to turn the clock back with some of this new technology. So I'm going to hang with it the best I can. So anyway, folks, nice to be back. Thank you. Get the indicators, do all that stuff. Put some comments in on the channel if you've used them, had success. We had somebody already said the first day he had them, already paid for them. Seriously, folks, if you bought the previous ones, it's a no-brainer. I mean, I could tell you internally the argument is that I'm giving this stuff away, but the point is that I want you to have it. It's more about learning how to use it moving forward than money that can be harvested out of this. And we are working on a mastermind course and some other things. So there's plenty to go forward, like I said. So appreciate all of you that already bought the thing, bought the indicators, all the stuff that's happened. So I will talk to you tomorrow, 1 o'clock Eastern time, and I will see you then. And we'll do some live stuff tomorrow with the markets, and I'll choose some indicators I think that'll be at least a good nucleus for you to start, since many of you have them. So have a great evening. We'll see you tomorrow at 1 p.m. Eastern time. Thanks again for watching.